Hello, Jim here. On occasion, I'm able to find a really good company and pair it with one of my favorite strategies. Today, I want to talk about just that. I found a company that I believe is at a really good price point. I put a trade on it back on May 30th and was able to close it just 12 days later. Today, I'll share with you that trade. I'll go into details on why I like the company. And at the very end, we'll look at the setup for a potential trade coming up this week. So stay tuned. I think it's going to be well worth your while. Okay, now the company I'm referring to is Marvell Technology. If we scroll down, we can actually see the description. So they provide data infrastructure for semiconductor solutions spanning the data center, core, and network edge. The company develops and scales system on chip architectures, integrating analog, mixed signal, digital signal processing functionality. It offers a portfolio of Ethernet solutions, including spanning controllers, network adapters, physical transceivers and switches, single and multiple core processors. So um, it's a technology company. It does or deals more with architecture. So they're right kind of in the middle of the AI stuff. And to find a company that isn't way overpriced, they're currently 73.51. When I made the trade back on May 30th, I believe they were about $10 cheaper, right around 63, 64. Um, so let's look at their profitability. It's good, but not great. They have been buying other companies. That's partially why I don't think their profitability is as good as it could be. Their return on common equity is negative, and a lot of times that occurs when a company is issuing more shares, maybe for the top management, as well as buying other companies. But overall, B plus, not, I'd prefer to see an A or A plus. I'd rather see higher for return on common equity, but definitely not bad for a B plus. Growth is kind of amazing. So revenue growth year over year, 21, almost 22%. EBITDA growth year over year, almost 90%. So you don't see many companies with an A for growth valuation. They are a little bit priced high, but if you look at their growth, they warrant that. Of course, when I did the trade, they were a little bit less. They were $10 less, so that was. And I don't necessarily agree. There depends on the companies in the sector. A lot of the different companies in the sector may not warrant such a high PE. I also like to look at capital structure. Market cap about 63 billion. They have 4.5 billion in debt. I believe their debt to equity is like 33%. They have a fair amount of cash. One thing I do like to look at profitability is down here. I like to see cash from operations, which is good. They do have a lot of employees, so their cash per employee is a little bit low. They are paying a dividend. They just started paying dividends. They're only paying 24 cents out, but just started recently. And then earnings, they beat earnings fairly recently, back on 529. And you can see they're steadily increasing. One thing I like to do is look at earnings estimates. Um, so 280 for next year, then 356, then 435, then 512. So pretty substantial increase in earnings. So their profitability should get better and better. Financials, you can see they're fairly steady with increasing revenue. It has bounced around a little bit, like it was 2.8 billion, then dropped to 2.6, then 2.9, then 4.4, then 5.9, then down to 5.5, then back up to 5.7, and now they're at 6.5. I like to see some steady growth, not necessarily every year growing from the previous year, but just some good steady growth. So a lot of the things I like to see, I also like to see if they have any momentum, and they currently don't have much momentum, but that could change, especially with a technology company with this kind of growth. I also like to look at bar charts. So here they are, kind of right in the middle of the 20 Bollinger Band. If you can, you know, sell a cash secured put in this area down here, it's what I typically look at. We can look at their RSI. It's not, looks like it's about 49 or mid 40s or pretty, yeah, like 49. And it is green going above yellow. So they are building up a little bit of momentum. And when I made this trade, again, I made it quite a bit lower. Let's go in next and we'll look at the trade I made. And then I'll show you not just where I made it, but also where I closed it. So let's jump into the next section. So here's my initial trade. I did it back on May 30th. I sold two vertical put credit spreads on Marvell at 50.40. So I sold the 50 short and purchased 40. And originally it was expiring on 7/18/25. So I believe it was about 45 to 50 days out. The delta was relatively low. This is why it's one of my favorite types of trades. I really like doing vertical put credit spreads around between 40 and 60 days, usually around a 15 delta. I've been very, very successful with them. Premium collected 165, which is a little bit lower than I typically like to see. And then the yearly or annualized return was a little bit lower. Now, again, I did close it a lot earlier. I believe they were a lot pricier at one time. If we go back to the Bollinger Band, they were up as high as 124. This is going 5 years. So, um, yeah, I don't know why they have $5. So the strikes are $5 apart. So you can choose like 45 or 50 or 50 or 55 or 55 or 60. I'd rather have $1. Now I didn't. It could be maybe in weeklies you get dollar strikes, meaning I could do a 54 or a 53. But in this trade, the strikes were $5 apart. And then over here is the trade where I closed it. So I closed it on June 11th, literally 12 days later. And if you're curious what environment this is Patreon. This is what I share with my membership. As soon as I make the trade, I post it. I also tell people, and we can come back here, I give details about the company. I also mention in a lot of cases, if you want to change the trade or do it slightly different. Some people just carbon copy me, but a lot of people will do cash secured puts versus vertical put credit spreads. They'd rather, save the money. Here it wasn't that expensive. I think that shows $33. I've had other instances where purchasing the long puts is pretty pricey. So I tell people, maybe you want to go with a bit more risk, earn a bit more. I'm very risk averse. I'm not trying to make a killing. I'm just trying to make a good enough return that I'm happy with my returns. So if you're interested in taking a look at the memberships, details will be in the description. I'm month to month. I don't require a phone call with someone. Actually, you could literally join one day and be on the phone with me the next day or potentially the same day. I don't have someone else that you have to go through. You can reach me directly, and you can do it month to month. You can join one month, leave the next month. I have people that leave and come back. I have people that might start with a higher level coaching. I do offer a higher level coaching, and then we'll drop down to the basic $25, I believe. If you purchase it for a year, it's more like $20 a month. But we'll do the $25 a month, and again, it's month to month. If you want to purchase it for a year, you can. I also provide a discount if you purchase it for a year. But a lot of my competitors, I don't know, it's very high sales tactics, kind of strong arming you to pay a lot of money. I don't do that. I'm in this to kind of teach people that you can do this. You can make some good income. I have people in my membership in my Discord, and I used to have memberships that were just Patreon. Now when you join, it's automatically that you get Discord as well as Patreon. And I have really advanced. I have very beginners. I have more advanced people. I have people making more than I am. And I have different sections in the Discord. So I have areas where you can see winning trades. You can see futures type trades. You can see zero DTE. I have a learning section, trading as a business, quite a bit of stuff there, but just wanted to share that. So you can see I was able to close this position a lot earlier. And because of that, and you can actually see here's the Marvell position and 50/40, it was a 14 delta. And I literally closed it. So after closing and spending $18.52, my premium was 146.75 once I closed it, which turned out to be a yearly return of $241. And I do believe if you treat your positions like this and you close them early and then you set up a new one, that works out better, at least from my own experience, than always rolling. A lot of times I do roll, but if you can close the position and then, week or two later because the market's dropped, come back in and then do another trade or find something else to trade at that time, you do make more money. It is definitely more profitable. And you can see that here. My original return, I think, was 69%. We can go back and look over here. And it was, yeah, 67%. And then after, it only being open 12 days, it's a 241%. So, and I'm trying to close more and more of my trades, but, I do this very part-time. I make one or two trades and I'm typically done for the day. On some days I might do three or four. Some days I don't do any. But it's still a part-time situation for me. So that's the piece I wanted to share, what the trade looked like that I did back the end of last month and into this month. And now let's look at a setup. Could you still make some good money doing another trade on Marvell? So we'll talk about that next. Okay, now I opened up my all-in-one trader page within Schwab. I've got Marvell again brought up. I have it set as a 60 short, so it's set up as a vertical put. Here, I do like the fact that Schwab has all sorts of detail information at the top, the 52-week range, the previous close, and it fills this whole page up with or for you, and then you just have to make the modifications or pick the strike you want and the expiration you want. So I'm selling the open one contract of Marvell expiring on 8/15. Now I can click on this show full detail and I can see, well, it's 54 days. So the last trade I did was 49. I am $10 higher, but the stock has increased, I believe, a little bit more than $10. And it would bring in anywhere from 117 to 127. The bid is 117 and the ask is 117. Let's look at the delta. This is just shy of a 14 delta, 0.1388. So it's in that range I like. I might say, well, and this is where the $5 separation of the strikes, it's kind of a pain. I could say, well, I want to go up to the next one. Well, that puts me to 65, and then I'm at a 23 delta. So that's a little bit too much risk for me. So I would go back to 60. And then I'm looking at buying a put on Marvell with $50 strike, again, expiring the same day. That's why it's vertical. They both expire on the same day. And I'm paying anywhere from 20 cents to 33 cents. And then the combined values are for the bid 84.95 is the mid level, so halfway in between the bid and ask, and then the ask is 107. Now I found more recently, originally when I started trading, I did mostly market orders, but now I go really close to the ask. So I would typically come over and I probably would go to 105, and then that would be my opening trade. So that's one contract. I also like to do two contracts. So you can see I'm very risk averse. I have members who are doing a lot more contracts. On occasion, if I find what I believe is an outstandingly great trade, I might go to three. Or if the stock price is really, really cheap, I mean, this is pretty close. If it's $10 or $15, I might do more contracts. But if I did three contracts, then I could potentially bring in 315. But I would pretty much mimic what I did before and go with two contracts at this point, mainly because Marvell isn't dirt cheap. It's $10 more than it was last month. So if it dropped another $5, say we have a rough week and by the end of the week it drops $5, then I might potentially think about going with 3 contracts. But here it would be 210. Then I could review the order. If it doesn't go through, then I can replace it. You can replace it in both Schwab and Fidelity and most brokers. I believe in Schwab, it's change, so you could cancel or change. And in Fidelity, I believe it's replace or cancel. Um, a lot of times, I don't even have to replace it once. When I do, sometimes maybe I have to replace it 2 or 3 times, and I'll typically go down. So the next time, if this one doesn't go through, I would replace it, and then I would go down maybe $2 or $3. I might go down to 102, and then rerun the trade and see if it goes through then. Now, if I come to a point where I don't really want to go any lower, then I just leave it sitting out there. And I have quite a few that will be filled late in the day. Sometimes I don't even notice. Those are the exceptions. I usually don't post those till the next morning because I just haven't noticed it. But I will share it with the community in Discord. I'll usually post, hey, I'm putting a trade out there on whatever stock it is with these strikes, and it hasn't been filled yet. I'm hoping it'll be filled before the end of the day, and I usually will do that in the discussion area, the trade discussion area. So that's what I wanted to share with you guys. What do you guys think of Marvell? Um, is it a company you would look at potentially trading in? Or are there other companies? I did do another trade on Friday with another technology chip related company, Applied Materials, that also is very similar to this one and isn't overpriced currently. It worked out to be an even more profitable trade. So you might want to look at that. If you're a member and you haven't seen that trade, again, I posted it last Friday. So that's what I wanted to share with you guys. As always, thanks for taking the time to watch the video. And, I hope you have a wonderful rest of your day.